Welcome back, Alpha Hunters. Okay, so we didn't really do that much week over week on the market, but the intra-week activity is extremely interesting because I do think we are now setting up to be bullish. I'm finally moving away from, hey, you know what? I don't know what the market's going to do, but I think for the near term, short term, maybe over the next several weeks, I think we'll be a little bit more bullish. And I actually did put a message out in the trade ideas section of the Discord. I basically just said, okay, definitely looking a little more bullish going into the next week. Did some call buying today as the weekly candle is going to have a really good lower wick. Snagged the September 400 calls. So we'll get into a little bit of that. We'll look at the weekly picture as the normal, but let's look obviously what went on this week. So let's go to an intraday 15-minute candle chart. And let's just see kind of what went on this week. So Monday we just opened down. We just kind of went sideways. There was basically just some rate inflation fears. Obviously we got some inflation data this week. So the market was just a little on edge early to start the week. Monday and Tuesday, the trading action was pretty flat for both days up until the second half of the day on Tuesday. And then we just got a rollover before Wednesday's morning inflation data came out. Then Wednesday morning, inflation data came out. It was bad. It was like 9.1% for total inflation. Core inflation actually did come down, still driven by those high energy and food inflationary numbers for the total inflation. So the core inflation was actually still ticking down, but we did get the inflation numbers Wednesday morning. The market bottomed up and basically just kind of traded very choppy in range bound for the most of the part Wednesday, for the second part of the day Wednesday. And then it opened down pretty heavily on Thursday. It did open below the Wednesday's morning candle. So it was kind of a pretty solid gap and go. If I go back to a daily picture here, I'm just going to zoom in. You know, we did have this bullish move on this Wednesday, and then we gapped all the way down below that. So we had a very solid bearish gap and go, but we didn't go. We very much just traded down a little bit for the first 45 minutes, and then we got bought up the rest of the day. We got above the open, made a new high in like the second or third hour. Basically, that was it. You know, we just kind of broke out to a new high. Middle part of the day, we had a retest into that open, and then it just kind of took off from there. And then Friday was just a continuation of it. We just opened higher, traded down, and then traded back up, and then just hung out in the 383 to about 385 range, pretty much in that zone the last 4 hours of the week. So it was kind of a busy week, but week over week, it wasn't all that busy. Even from the beginning of the week, right, to the end of the week, you know, we opened the week right here at 385.84 roughly, and then closed the week out at 385. So not much going on from the beginning of the week to the end of the week, but that middle of the week action was very, very telling. So one thing I want to look at real quick is where we got to on Thursday morning. So that early Thursday morning sell down, that first 45 minutes, we got just below this cluster of buying candles, and then it got bought straight up all the way from that low on Thursday all the way through the close on Friday. It's very interesting. That's why I was definitely digging, buying some positions, and especially after I show you here on the weekly candle what it looked like with this really massive lower wick hammer candle. This is a tell for which way the market is leaning and the direction is trying to go. Whichever way the wick is, the market's going to try and go the opposite way. And we had one 2 weeks ago, for that is June the 27th that week. So we had a pretty good lower wick. No, not a big significant one like we had this week. This one is very significant. And we got just below actually the 2 previous weeks lows, and then just bounced straight up. If you would have asked me this Thursday morning as we were making that fresh low, I was like, man, this is not looking good on the market. But the fact that we saw strong buying come in after we broke down the 2 previous weeks, strong buying come in Thursday through Friday, going into the weekend, sets up very nice, okay? So let's go ahead and look at the Qs real quick, and it's going to be about the same picture. Obviously, you see right here on the weekly, we got a similar picture here. Now, it didn't break down the 2 previous weeks like the SPY did, so tech is being strong. Tech will probably lead this bullish move, whatever kind of bullish move we get to the upside. I would expect tech to definitely lead this, okay? They have been the ones that have been most beaten up for this year. Definitely expect tech to lead to the upside. But the numbers that we really need to get above are the 2 weeks ago high for the Qs, and it's gonna be the same thing for the SPY, right? The 2 week ago high, which was around the 293 area on the SPY, and on the Qs, it's right around that 296.5 spot. If we start to break above that, we're definitely going to see some movement to the bullish side. Now, I'm not saying I would go all in on this. I do think we'll eventually roll back over later on in the year. I just think we're a little bit overdone to the bearish side for most of what we've seen for the first half of this year. So I think the market's just going to rest. We're going to get some positive news to come out, especially with what we got for the jobs data today on Friday morning. Jobs report was very good. And investors are going to start turning towards, they would expect to see for the July inflation data numbers. And let me tell you, I know a lot of people are looking at the gas at the pump, you know, and other kinds of energy prices. A lot of people's electric bills, especially where I live down in South Texas, electric bills have been very high here. So a lot of people are definitely paying attention to that. But some of the factors that we have seen really driving inflation is that high energy costs. We are seeing those prices come down quite substantially now here in the beginning parts of July. Towards the end of June, they really started coming down, and really here in July, they have been coming down pretty good. We'll see if that trend kind of continues, but all that price depreciation that we're seeing in some of those commodity prices, those will be revealed in the inflation numbers that will come out in August for July. So investors are going to start paying attention to what they think the inflation numbers will be for August, as that might indicate if the Fed can stop raising rates as aggressively or just stop raising rates at all. But I think the Fed is going to be trying to squeeze out the last few times of getting the Fed funds rate as high as possible, because this is one of their biggest ways to counteract a recession, is being able to lower interest rates. And the higher they can get them, the more that they're going to be able to lower interest rates. And a lot of people are expecting that we are going to go into a recession. Potentially, if we're not already in one, we're not going to go into one, you know, later this year, which I think we probably will go into one later this year or next year. But that's kind of my look on the Qs and the SPY. I don't really have a good price target right now. We're going to have to look and see just how strong we kind of break through some of these levels. If we break through them kind of strong, then we can look to see how high we might go. We definitely still might get up to the 330 type area for the Qs here over the next like couple weeks by the beginning of August. Same thing for the SPY, be like the 430 level potentially. It's really just going to depend. I'm not going to hold out for that by any means, but we just need to see how strong some of these breakthroughs are to the bullish direction before we can really start finding some potential price target levels. Another thing that I have done this past week is I started doing a live stream on Tuesdays and Thursdays. It's going to be 2 o'clock Eastern time. So it's going to be for about an hour to an hour and a half in that afternoon time frame. Kind of just trying to get those working people that are busy at work, you know, try to get in, ask some questions, maybe during like their lunchtime, that kind of thing. You know, you don't have to stay the whole time, but if you don't want to stop by, you got a question, you can get in there, ask me. I was in there with a buddy this week. We were just kind of testing some things out. Audio was good, so all that kind of was working. But that'll be on Tuesdays and Thursdays. So if you want to stop by the live stream, it'll be 2 p.m. Eastern. And it should be a pretty dead time during the day to where there shouldn't be a whole lot of movement. But if you want to get in there, ask some questions, what you're thinking, kind of, you know, if I jive with that, or maybe there's a better way to kind of do it, better way to go about it. You know, that's the whole point of it, okay? And I'm just trying this out on Tuesdays and Thursdays. If it winds up being good, or people want it on Mondays or Wednesdays or Fridays, we can also expand it to all days during the week. So it's just kind of trying it out on Tuesdays and Thursdays right now, but let me know what you guys would like to do. So some of the things that we were actually looking at the live stream on yesterday was Apple was crazy. Look how strong Apple looks. Look at this. This thing looks like a monster right now compared to, you know, what the SPY looks like. I mean, we're just looking at the SPY. I mean, it looks pretty flat over the previous few weeks, and Apple is definitely trending in the bullish direction. So Apple could get a lot higher If it gets back up into the zone, I still might be looking for a bearish play, which would be around that 160 to 165 type area. So if it gets back up there, I'll definitely be looking for it. But yeah, Apple looks very strong. I think a lot of people are just trying to look for safe, quality names. Apple is one. I'm not going to say that it's not quality. I just think that they're the most valuable publicly traded company in the world. Usually the company that holds that belt doesn't hold it forever. They do wind up losing it. And I do think a lot of capital will be rotating out of Apple as we potentially go into the next bull market. I don't think Apple will hold on to that title too much longer. So what company might take over that most valuable publicly traded company in the world? Now, we're just talking about the U.S. equities. We're not talking about internationals. But Microsoft definitely could be one of those contenders. I think Microsoft probably will be the contender because they're in a lot more of the future growth areas than Apple is. But this could be very interesting if Microsoft can get going back to the bull side. I think there's much more limited downside for Microsoft than there is Apple at this point in time. Another company that we were kind of looking at yesterday was Kimberly-Clark. Look at how flat this is. Let me go back to a weekly. Actually, let me go back to a monthly and look at how flat this sucker has been for 2-3 years. 3 years, this thing hasn't really moved at all. So my buddy John and I, we were just kind of looking at some different option ideas and doing put sales on Kimberly-Clark. KMB is really intriguing here to just kind of generate maybe a 35 to 40% annual rate of return, as you know, you're not really looking at a loss of capital in any way on KMB. It's just going sideways. You have weekly options out for 6 weeks. So this thing looks really good. I would not be worried at a loss of capital on a company like Kimberly-Clark. This is a company you do some put sales on, and if you do get put shares, you do just roll right around and sell some covered calls. That is basically called the wheel strategy. This looks really good. This is kind of the stuff that you look for to do the wheel strategy on. Okay, it's very predictable. You know how much capital basically you're going to be tied into it for, and who knows how long it'll keep just going, chopping sideways. But I mean, locking up a 35 to 40% rate of return on a company just selling some options is pretty promising. And that's what you got to love about the options world, right? There's always ways to make money no matter what it's doing, even if a stock is going sideways. But like I said before, you're definitely going to want to start to pay attention to what kind of stocks are popping over this next little bullish trend. I think we'll get onto here in the next few weeks. I think we'll probably get onto this bullish trend. You know, AI might be one of those type companies as it looks to potentially break above this 100 daily moving average. And if it does get above that, obviously it'll probably make a run up to the 200 or maybe this mid 20 level. You can definitely watch out for companies like this that have a lot of promise to going into the future. If they can make it through this hard time, like a lot of companies aren't. We're seeing a lot of companies that crypto space kind of defaulting, a lot of those crypto lending type companies, you know, that have been defaulting here recently. I think there's gonna be a lot more pain in the crypto world. So I would definitely stay away from anything crypto. If we go look at Bitcoin just real quick, I would definitely just stay away from anything kind of crypto related. I think we'll probably get a bounce here as we finally got this breakdown that we're holding on, you know, up in this upper 20 type area, and then it finally broke down a few weeks back. Definitely look for a bounce up into this previous support type area. Anything in that mid 20s, I think, is going to be resistance. Even this 10 exponential moving average coming down will be resistance. It's under that 200 moving average also on a weekly. So there's a lot of things going against Bitcoin and cryptocurrency right now. So I don't think the pain is over. I still was talking to some people. They think right now is a good time to be buying the dip in crypto, and I'm like, no, man, this thing, there's a lot more pain to be had there. But let's get back to AI. So companies like AI are going to be very interesting, as they're going to be huge bargains getting them down at these levels. I definitely think you could start buying some long-term type positions for companies like AI. SOFI, I don't know. I think it's interesting. It really, you got to do your due diligence on what their loan exposure is. But I do kind of like the idea of getting into some SOFI down here at these low positions, because it's setting up to make some bullish runs as well. And companies like these, they're already starting to bottom. You know, they probably won't make any more new lows as you go into the future if the market makes new lows. The companies that will make new lows going into the future are going to be your potentially Apple, maybe Microsoft, you know, Amazon, Google, the big heavyweights. Tesla, they'll probably continue to weigh on the market as people are just going to rotate out of those names because they won't be able to get the reward that you will be able to get in the newer names. So start to pay attention, get your list ready for any kind of dip buying that we can get maybe in the future, but definitely pay attention to how some of those newer names perform potentially over this next little bullish market. I think we will definitely get the breakout going into next week. If it's not next week, I doubt we break down below the low that we put in this week. I think that's pretty solid. I definitely would be looking to be more bullish here for now. So have a great weekend. Alrighty, take care, Alpha Hunters.